Okay. Okay, so I'm going to be breaking down today's trade, the trade I took today while I was in school. So, this is the screen recording of the trade I took today. But first of all, drag this right there. Oh yeah, I don't know which is the best position. Right. Let me just make this one smaller. Okay. So this is the first video. Okay. So right there, as you can see, we swept our London highs and Asian highs, right? So as we fast forward, so as we swept our London highs and Asian highs, I was expecting to see this 3-minute fair value gap get inversed, but as you can see, we tapped into that fair value gap. We inversed on SPX500, as you can see here, but we haven't inversed yet on NAS100. So no trades taken yet. So as we fast forward, you see that we already inversed this fair value gap on NAS100. But why didn't I take this trade? Number one reason why I didn't take this trade was because I was seeing price approaching these highs on SPX500, and I was thinking, what if we'll create an SMT right here? That means I have to close out early because price was so close to taking out this highs, but we haven't even gotten any closer to this high on NAS100. So I just decided to wait a few minutes to see what price was doing, and as you can see, we ended up taking these highs, but NAS100 hasn't taken these highs. So I decided to wait and see if we could see a good SMT setup. And yeah, as you can see, we had an SMT, and all I needed right now was to see an inverse fair value gap. If we can close as the body below this fair value gap, it is an inverse fair value gap. But right now, even though price is pushing, I cannot take on this trade because we do not know if we might see a huge rejection to the upside. So I have to wait for this body closure or this kind of body closure below this fair value gap to show that it's an actual inverse fair value gap. But this is where things were actually getting scary. Oh yeah, as you can see right here, price was all the way down here, right? But then look at it, it had this huge rejection, meaning that it hasn't inversed the fair value gap yet. As you can see, price was all the way down here, but went back up as a rejection. So in order for me to see a clear inverse fair value gap, the candle has to be below or has to close below this fair value gap. So the candle finally closed below this fair value gap, as you can see. This was where my entry point was supposed to be. I was thinking maybe price was going to close below as a body earlier, but I ended up taking my trade right here. As you can see, taking my sell trade right there. My stops was at this high, and then my first TP was supposed to be at this fair value gap here, and my second TP was supposed to be here. Now, as we fast forward, this is what happened when price tapped into the fair value gap. We've tapped into a fair value gap on NAS100. This fair value gap is the same fair value gap here. But look, SPX hasn't even gotten any closer to this fair value gap, but NAS100 has already tapped into this fair value gap. Now, as you can see, I entered with 2 lots, but now I closed out 1 lot. You guys might be asking, why did I close out with 1 lot? We still had a lot of time to push to the downside. The reason was because, okay, let's just give it as an example right here. As you can see here, let's say, for example, I took a sell trade right here, or on SPX500, I took a sell trade right here, and my TP was right here at this fair value gap. Let's say I took a sell trade right here, and my TP is here. Now, NAS100 already tapped into this fair value gap. I would also be saying, oh, because NAS100 tapped into this fair value gap, I would also wait for SPX500 to tap into this fair value gap. If I do that, I will lose this trade. Why? Because NAS100 has already tapped into this fair value gap and is going to have a bullish reaction. It also happened in SPX500, but we didn't just tap into the fair value gap. So that was what was running into my mind right here, and that was why I ended up pushing my stop loss to break even. I actually put it to break even right here. So the reason was because of this fair value gap again, because I was feeling, oh, for us to have this upwards or bullish movement without even tapping into this fair value gap, that means we might also have another bullish movement or a bullish reaction off of this fair value gap, even though SPX500 hasn't tapped into this fair value gap yet. So that was the reason why I had to go aggressive on this trade by putting my stop loss to break even right there and closing out on one lot at that point. But if we end up looking at this trade, we got stopped out at break even, but with some little profit, we made about $13. The break even was at 0.2. I think with commissions, that's why. But as you can see here, we made about $13 on the demo account. But if we go back, or if you watch another video right here, the reason why price was retracing was because of this 3-minute fair value gap that I didn't even realize. But I don't care. That was still fine. I'm not going to enter this trade anymore. The only issue right now is that price actually went into my direction. Because as you can see, price ended up going into my direction, and yeah. So the trade would have been good, just that I just want to enter a trade when I saw this multiple rejections off of it. Because as you can see here, we had 1, 2, 3 rejections off of this fair value gap. So I just decided to put my stop loss to break even and close out on one lot right there. So that was basically today's trade, and I'll see you guys tomorrow.